Welcome to our comprehensive guide on how to protect your money from tax using individual savings accounts, commonly known as ISAs. ISAs offer a powerful tool to shield your savings and investments from the burden of taxation, providing a range of options tailored to different financial goals and risk tolerances. Protecting your money from taxes involves understanding the tax laws and utilizing various tax-advantaged accounts available in your country. United Kingdom, Individual Savings Account, ISA. ISAs are tax-advantaged accounts that allow individuals to save or invest money without paying income tax or capital gains tax on the returns. There are several types of ISAs. Cash ISA holds cash savings, and interest earned is tax-free. Stocks and Shares ISA invests in stocks, bonds, and other investment products, and any capital gains or dividends earned are tax-free. Innovative Finance ISA invests in peer-to-peer lending or crowdfunding platforms, and returns are tax-free. Lifetime ISA, designed for saving for a first home or retirement, with a government bonus added to contributions. Junior ISA, for children under 18, with tax-free savings and investments. Pension plans, contributions to pension plans are typically tax-deductible, and the growth within the pension fund is tax-free until withdrawal. There are various types of pension plans, including workplace pensions, personal pensions, and self-invested personal pensions, SIPs. Capital Gains Tax, CGT, allowance. Each tax year, individuals have a CGT allowance, which allows a certain amount of capital gains to be tax-free. For 2022-23, the annual exempt amount is £12,300. Utilizing this allowance can help reduce CGT liabilities. Enterprise Investment Scheme, EIS, and Seed Enterprise Investment Scheme, SEIS. These schemes offer tax relief for individuals who invest in qualifying small and high-risk companies. Investors can receive income tax relief and capital gains tax exemption on certain investments. Venture Capital Trusts, VCTs. VCTs are investment trusts that provide tax relief for investors who buy newly issued shares in qualifying companies. Dividends and capital gains from VCTs are tax-free. United States, US, 401k plans. Employer-sponsored retirement plans that allow employees to contribute a portion of their salary before taxes, reducing taxable income. Individual retirement accounts, IRAs. IRAs are personal retirement accounts that offer tax advantages. Traditional IRAs allow contributions to be made with pre-tax dollars, while Roth IRAs accept after-tax contributions and offer tax-free withdrawals in retirement. Health savings accounts, HSAs, available to individuals with high-deductible health plans. HSAs allow for tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. 529 plans. These plans are designed to save for future education expenses. Contributions are made with after-tax dollars, but earnings grow tax-free, and withdrawals for qualified education expenses are tax-free. Municipal bonds. Interest earned from investing in municipal bonds is typically exempt from federal income tax. State-specific municipal bonds may also offer tax advantages at the state level. Capital gains tax strategies utilize strategies such as tax loss harvesting to offset capital gains with capital losses and long-term investing to qualify for lower capital gains tax rates. It's crucial to consult with a financial advisor or tax professional to understand the specific tax implications and to develop a personalized tax-efficient strategy based on your financial situation and goals. An ISA, Individual Savings Account, is a tax-advantaged savings or investment account available in the United Kingdom. ISAs were introduced by the UK government to encourage saving and investing by providing tax incentives. Stocks and Shares ISA invests in a variety of assets such as stocks, bonds, mutual funds, and exchange-traded funds, ETFs. Any capital gains or dividends earned within the account are tax-free. Innovative Finance ISA invests in peer-to-peer lending or crowdfunding platforms. Returns generated from these investments are tax-free. Lifetime ISA, designed for individuals saving for a first home or retirement. Contributions receive a government bonus, and withdrawals are tax-free if used for a qualifying purpose. Junior ISA, intended for children under the age of 18. Parents or guardians can open and manage a junior ISA on behalf of a child. The funds within the account are held until the child reaches adulthood, at which point they gain control over the account. Money pot, on the other hand, doesn't have a standard financial definition. It may refer to a pot or pool of money set aside for a specific purpose or goal. The term money pot is often used informally to describe a designated amount of money earmarked for a particular purpose. The main differences between a normal bank account and an ISA, individual savings account, are related to tax treatment and the types of savings or investments allowed. Tax treatment: normal bank account. Interest earned on funds held in a regular bank account is typically subject to income tax, meaning you have to pay tax on the interest earned according to your tax rate. ISA savings account: with an ISA savings account, any interest earned on your savings is tax-free. This means you don't have to pay income tax on the interest earned within the ISA. Annual allowance: normal bank account. There's no limit to how much money you can hold in a regular bank account, and there's no specific allowance for tax-free interest earnings. ISA savings account. ISAs have an annual allowance set by the government, limiting how much money you can deposit into an ISA each tax year without incurring tax. The annual allowance covers contributions across all types of ISAs, e.g., cash ISA, stocks and shares ISA, innovative finance ISA. The annual allowance is subject to change and may vary depending on the type of ISA and your personal circumstances. Types of savings or investments: normal bank account. Funds held in a regular bank account are typically limited to cash deposits. Some accounts may offer additional features like check writing privileges or ATM access. ISA savings account. ISAs offer different types, including cash ISAs, for cash deposits, stocks and shares ISAs, for investing in stocks, bonds, etc., and other specialized ISAs like the lifetime ISA or innovative finance ISA. Each type of ISA has its own rules regarding eligible savings or investments. Withdrawals and access: normal bank account. Funds in a regular bank account can usually be withdrawn at any time without penalty, subject to any withdrawal restrictions or fees imposed by the bank. ISA savings account. ISAs typically offer flexibility in terms of withdrawals, but there may be restrictions or penalties for accessing funds in certain types of ISAs, particularly with fixed-term accounts or ISAs with specific rules such as the lifetime ISA. Overall, ISAs provide a tax-efficient way to save or invest money, offering tax-free growth on your savings or investments within the account, up to the annual allowance set by the government. In the UK, there are several types of individual savings accounts, ISAs, available, each with its own rules and tax advantages. Cash ISA allows individuals to save money in a tax-efficient manner, with interest earned being tax-free. Stocks and shares ISA enables individuals to invest in a variety of assets such as stocks, bonds, and mutual funds within a tax-free wrapper. Innovative finance ISA, IFISA, allows individuals to invest in peer-to-peer lending platforms or crowdfunding investments within a tax-free wrapper. Lifetime ISA, LISA, aimed at helping individuals save for their first home or retirement, offering a government bonus on contributions made, subject to certain conditions. Help to Buy ISA, designed to assist first-time homebuyers, with the government providing a bonus on savings towards a home deposit. In the US, the equivalent of ISAs are various types of individual retirement accounts, IRAs, which also offer tax advantages for retirement savings. Traditional IRA, contributions may be tax-deductible, and earnings grow tax-deferred until withdrawal, at which point they are taxed as ordinary income. Roth IRA, contributions are made with after-tax dollars, but withdrawals, including earnings, are tax-free in retirement, provided certain conditions are met. September IRA, simplified employee pension, geared towards self-employed individuals and small business owners, allowing for tax-deductible contributions and tax-deferred growth. Simple IRA, savings incentive match plan for employees, also designed for small businesses, allowing both employers and employees to make contributions with tax advantages. Solo 401k, individual 401k, intended for self-employed individuals without employees, providing higher contribution limits than traditional IRAs or Roth IRAs. It's important for individuals to consider their own financial situation and objectives when choosing the most suitable account. United Kingdom, UK, ISA allowance. The ISA allowance is the maximum amount you can deposit into ISAs each tax year without paying tax on the interest, dividends, or capital gains earned within the ISA. The ISA allowance in the UK is £20,000 per individual. This allowance can be spread across different types of ISAs, such as cash ISAs, stocks and shares ISAs, innovative finance ISAs, lifetime ISAs, and junior ISAs. The allowance is subject to change, so it's essential to check the current limits for each tax year. United States, US, IRA contribution limits. Individual retirement accounts, IRAs, in the US have contribution limits that determine how much you can contribute to these tax-advantaged retirement accounts. The contribution limit for traditional and Roth IRAs is $6,000 per individual, with an additional catch-up contribution of $1,000 for individuals aged 50 and older. These limits are subject to change based on inflation adjustments. 401k contribution limits. 401k plans are employer-sponsored retirement accounts commonly used in the US. As of the 2021 tax year, the contribution limit for 401k plans is $19,500 per individual, with an additional catch-up contribution of $6,500 for individuals aged 50 and older. Employer contributions may also contribute to these accounts, but they have separate limits. HSAs and 529 plans, health savings accounts, HSAs, and 529 plans have their own contribution limits, which can vary based on the type of account and other factors. The HSA contribution limit for individuals with self-only coverage is $3,600, and for individuals with family coverage, it is $7,200, with an additional $1,000 catch-up contribution for individuals aged 55 and older. 529 plan contribution limits vary by state and plan. It's important to note that these limits are subject to change, and it's advisable to check with official sources or consult a financial advisor for the most up-to-date information regarding contribution limits and tax allowances in both the UK and the US. Whether you're saving for a rainy day, investing for the future, or planning for retirement, ISAs offer a versatile and powerful means to protect your money from the grasp of taxation. We encourage you to explore the various types of ISAs available, consult with financial professionals, and take decisive steps towards securing your financial future. Thank you for joining us, and here's to a prosperous and tax-efficient journey ahead. Greetings, fellow investors. Today, we embark on an exhilarating expedition into the heart of the financial world, shining a spotlight on the latest marvel, the new British Individual Savings Account, affectionately known as the ISA. Brace yourselves as we unravel the mysteries and unveil the wonders of this innovative financial instrument. From its inception to its transformative potential, we're here to equip you with everything you need to know about the new British ISA. So, fasten your seatbelts, because the journey to financial enlightenment begins now. The new British ISA, or Individual Savings Account, is an important financial product for UK residents looking to save and invest money in a tax-efficient manner. Here's what you need to know about it. Increased allowance. Each tax year, the British government sets a limit on how much money you can save or invest in an ISA. The new British ISA may come with an increased allowance compared to previous years, allowing you to save or invest more money without paying tax on the returns. Government announcement. Changes to the ISA allowance are typically announced by the British government as part of the annual budget or fiscal updates. The Chancellor of the Exchequer may announce adjustments to the ISA allowance to encourage saving and investment or to align with economic policies. Inflation adjustment. The ISA allowance might be increased to keep pace with inflation. This ensures that savers can continue to benefit from tax-efficient savings and investment opportunities without losing purchasing power due to rising prices. Policy objectives. Changes to the ISA allowance may reflect broader policy objectives, such as promoting long-term saving for retirement, encouraging investment in certain sectors or assets, or supporting first-time homebuyers. Consultation process. Before making any changes to the ISA allowance, the government may engage in consultation with industry stakeholders, financial institutions, and the public to assess the potential impact and gather feedback on proposed adjustments. Legislative process. Any changes to the ISA allowance would require legislative approval. This involves parliamentary debate and scrutiny before new allowances are officially implemented. Effective date. Changes to the ISA allowance typically come into effect at the start of the new tax year, which begins on April 6 in the UK. This provides individuals with sufficient notice and time to plan their savings and investment strategies accordingly. Communication. Financial institutions, including banks, building societies, and investment firms, would communicate any changes to their customers to ensure awareness and understanding of the updated ISA allowances. To stay informed about any updates or changes to the ISA allowance in the UK, individuals should monitor official government announcements, budget statements, and updates from financial regulatory authorities. Additionally, seeking advice from financial advisors or consulting reputable financial news sources can provide valuable insights into changes affecting personal finances and investments. Tax benefits. ISAs offer tax benefits on the returns you earn. This means any interest, dividends, or capital gains generated within the ISA are not subject to income tax, capital gains tax, or dividend tax, depending on the type of ISA. The new British ISA, like its predecessors, offers several tax benefits to investors. Here's what you need to know about these tax advantages. Tax-free growth. One of the primary benefits of investing through an ISA is that any returns you earn on your investments are entirely tax-free. This includes interest on cash savings, dividends from stocks and shares, and capital gains from the sale of investments within the ISA wrapper. No income tax on interest. In a cash ISA, the interest earned on your savings is not subject to income tax. This allows you to maximize the growth of your savings without having to worry about losing a portion of your returns to tax. No capital gains tax, CGT. When you invest in a stocks and shares ISA, any capital gains you make from selling your investments are exempt from capital gains tax. This can be particularly beneficial for investors with larger portfolios, as it allows them to rebalance their investments or realize gains without incurring tax liabilities. No dividend tax. Dividends received from investments held within a stocks and shares ISA are also exempt from dividend tax. This is significant for investors who receive regular income from dividend-paying stocks, as it allows them to retain the full amount of the dividends without any deductions for tax. No further tax reporting. Investments held within an ISA do not need to be reported on your tax return. This simplifies the tax filing process, as you don't need to calculate or declare any income or gains generated within the ISA wrapper. No tax on withdrawals. Unlike other investment accounts, you can withdraw money from your ISA at any time without incurring tax liabilities. This flexibility makes ISAs a popular choice for both short-term and long-term savings goals. Inheritance tax benefits. ISAs are generally not subject to inheritance tax, IHT, which means that the value of your ISA investments won't be included in your estate for inheritance tax purposes. This can help preserve more of your wealth for your heirs. Tax-efficient transfers. If you decide to switch providers or transfer your ISA to a different type, e.g., from a cash ISA to a stocks and shares ISA, you can do so without losing the tax benefits. This ensures that you can continue to benefit from tax-free growth on your investments. Overall, the tax benefits offered by the new British ISA can help investors maximize their returns and achieve their financial goals more efficiently. It's essential to take advantage of these benefits by making full use of your ISA allowance each tax year and ensuring that your investments align with your risk tolerance and investment objectives. Types of ISAs. There are several types of ISAs available, including cash ISAs, stocks and shares ISAs, lifetime ISAs, and innovative finance ISAs. The new British ISA might introduce additional types or modifications to existing ones. The new British ISA encompasses various types of individual savings accounts, ISAs, each offering unique benefits. To maximize the advantages of ISAs, it's crucial to understand the different types and how to leverage them effectively. Cash ISA. A cash ISA is similar to a regular savings account, but the interest earned is tax-free. It's suitable for individuals seeking low-risk savings with easy access to funds. To get the most benefit from a cash ISA, compare interest rates among different providers and consider locking in funds for higher rates through fixed-rate cash ISAs. Stocks and shares ISA. A stocks and shares ISA allows you to invest in a wide range of assets, including stocks, bonds, mutual funds, and exchange-traded funds, ETFs. The returns generated, whether from capital gains or dividends, are tax-free. To maximize benefits, diversify your investments across different asset classes and regularly review your portfolio to ensure it aligns with your risk tolerance and financial goals. Innovative finance ISA. This type of ISA allows investment in peer-to-peer lending platforms and other alternative finance investments. Interest earned through peer-to-peer lending is tax-free. To get the most out of an innovative finance ISA, research platforms carefully, assess the risks involved, and diversify investments across multiple loans to minimize default risk. Lifetime ISA, LISA. A lifetime ISA is designed to help individuals save for their first home or retirement. The government provides a 25% bonus on contributions, up to a maximum annual limit. To maximize benefits, contribute the maximum amount eligible for the government bonus each year and consider using the LISA for long-term goals to benefit from compound growth. Junior ISA, JISA. JISAs are for children under the age of 18, allowing tax-free savings and investments. Parents or legal guardians can open and manage the account on behalf of the child. To make the most of a JISA, start saving early, consider long-term investment options, and regularly review and adjust the portfolio as the child grows older. To maximize the benefits of ISAs overall, utilize your annual ISA allowance fully to shelter as much of your savings and investments from taxes as possible. Regularly review and rebalance your ISA portfolio to ensure it remains aligned with your financial goals and risk tolerance. Consider transferring existing ISAs to take advantage of better interest rates or investment opportunities. Seek professional financial advice to optimize your ISA strategy and ensure you're making the most of the tax benefits available. By understanding the various types of ISAs and implementing a tailored strategy, individuals can effectively leverage these accounts to grow their savings and investments while minimizing tax liabilities. Flexible access. Many ISAs offer flexible access to your money, meaning you can withdraw funds and replace them within the same tax year without affecting your annual allowance. However, this feature varies between different types of ISAs. Eligibility. To open and contribute to a British ISA, you must be a UK resident over the age of 16 for cash ISAs and over 18 for stocks and shares ISAs. There may be additional eligibility criteria for other types of ISAs. Transferability. It's possible to transfer ISAs from one provider to another without losing the tax benefits. This allows you to shop around for better interest rates or investment opportunities. Lifetime ISA bonuses. If you're saving for your first home or retirement, a lifetime ISA, LISA, may be suitable. The government adds a 25% bonus to your contributions, up to a certain limit each tax year, which can significantly boost your savings. Risk and reward. Depending on the type of ISA you choose, there will be varying levels of risk and potential reward. Cash ISAs offer security but lower returns, while stocks and shares ISAs carry higher risks but the potential for higher returns over the long term. Annual deadline. It's important to note the deadline for using your annual ISA allowance, typically at the end of the tax year on April 5th. Unused allowances cannot be carried forward to the next tax year. Professional advice. Before opening a new British ISA or making any significant financial decisions, it's advisable to seek advice from a financial advisor who can help tailor your investments to your individual circumstances and goals. As we bid adieu to our exploration of the new British ISA, armed with knowledge and insight, remember, the power to shape your financial destiny lies in your hands. Whether you're planning for the short term or securing your future, the new British ISA stands as a beacon of opportunity and empowerment. So, seize the reins, make informed decisions, and embark on your path to financial prosperity. Thank you for joining us on this enlightening voyage, and may your investments flourish and your dreams soar high. Until next time, happy investing.